All right, welcome back. We're going to set up another trade plan in KTOS, and we're going to talk a little bit more about gaps. I started a series on gaps starting with last post. Just a reminder, this is part of an exercise where we're planning 30 trades in a row, knowing every aspect, planning every aspect of the trade ahead of time, knowing where we're going to get in, where we're going to put a stop, our position sizing, our management, how we're going to exit, we're documenting it. And so the exercise is not so much about the market structure, it's about learning discipline and consistency. But I'm doing various lessons along the way. So, all right, let's talk a little bit about gaps. And here I'm going to take some broad strokes and talk about gaps as contraction, expansion. So we'll talk about that before we talk about trading gaps. So markets move in contraction and expansion. Actually, everything moves in contraction and expansion. And we can use this to read and understand markets. In the last post, we just basically talked about a wide range bar gap. But, the standard gap that we see is something like this. Wide range bar is something like this. It's a bar that's larger than the previous three with a space between the previous bar and the subsequent bar. And then a relative gap. So all of these are actually, they have the same essence. They're empirically gaps. They're contraction, expansion, contraction, expansion, contraction, expansion. And we want to learn to see a chart that way. There's a lot we can do when we understand this. So for instance, soften your eyes just a little bit. And I don't know, start from here and see if you can see the contraction and expansions that match the model. If I take just a simple box, I go something like this, right? Contraction, expansion, contraction, expansion, contraction. So we can see contraction, expansion, contraction. Let's see if I can get this going. I'm messing it up too much. Expansion. And you might even notice that the expansions are about the same size. And then on the pullback, remember, this is relative. So this is how markets move. So see it on the pullback. Contraction, expansion. If I can get the behave. And then we'll have contraction, and expansion. Not as big this time, but you get it, right? All right, so you can see how the market's moving. Contract, expand, contract, expand, contract, expand, reverse. And this is actually how a swing moves, right? We can take the pretty swing, do something like that, and it's going to have this contraction, expansion, contraction, expansion, contraction, expansion, and so on. So learn to see it in a chart, and then there's much that we can do with this. So, if we, you can basically remember I see everything in swings, so we'll just talk about swings a little bit. And we can see swings. And so it's relative, right? You can see that these are about the same size and these are about the same size. And look at this impulse leg, right? You'll be able to see it very similar. See the contraction in here? Got my magnet on. Huh? And then watch, right? See, this is that wide range bar here. And this is actually, something that we will learn to play coming out of the bottom of a pivot. And then if we keep going, right, contraction, expansion, contraction, and then expansion, if I can grab it. So we can see how the market moves, and we can basically begin to understand and even plan some methods and designs around it. So like notice in this swing, as it's going up, we expand out of the bottom pivot, we contract, we expand through the high. And then notice where it falls back to. Boom. So that's what it's doing when it's trying to swing and make a higher low. And this one is no different than this one. See, we have the contract, expand, contract, continue, expand, contract, and then pull back. And where's it landing? And so, don't get fuzzy-eyed or blurry-eyed on this. It's just support and resistance, right? Expand. Everybody's excited. Yay! Slow down, figuring it out. Buyers and sellers are marking their territory. That's where you get these clumps, these ranges, these coils. These coils are where support and resistance are, right? Not at the highs and lows. It's at these coils when we see them. That's the marking that we can use on top of understanding direction. All right, so just a quick understanding about how markets move a little bit here. Now let's do the interesting stuff, the trade. So I am swing trading, market's going up. I am looking basically to use this contraction down here to lean on. And so I'm going to use a line like this. And all I'm doing is cutting up this reaction leg so that I can be very objective in what I'm doing. So I can come in here on the left and have orders waiting here, or I can wait for a little more confirmation for it to turn back up. And so, if you just kind of take a look, you'll see even in a more relative form, see how this leg is built with contract, expand, contract, expand. And then you can even see the interplay on price here. Okay, so before we get to using this, like I said, let's do the important stuff. Let's plan a trade. So we want to know everything about what we're doing, plan it, and just do it ahead of time. Trading is a matter of, we'll just put it here, just so we can stay reminded. Right? An objective method, an entry, stop, and exit, position sizing, documentation, and review. So I suggest you just make a template of the trade plan. And that way you just fill it out. And, let your impulses ride, but stick to your plan. All right, so from here it's easy. I know exactly where I'm going to enter, 1907. I know exactly where I'm going to put a stop, 1789. We have to calculate shares, and this is part of my documentation. So let me get my spreadsheet over here. And you can see we already have a few other trades planned. Today is the 25th. Everything's planned at least a day ahead of time. We're talking Katos. Going along. We know exactly where we're going to enter, right? 1907. We know exactly where we're putting a stop at the 25 line, 1789. And don't worry about my methods. Just use this as a guideline about documenting every aspect of your trade ahead of time. So this tells me how many points risk, target points, so 424 shares. All right, so that's part of my documentation. Let me finish filling this out. Target, I'm shooting for 6 to 1, and that's going to be 26.15. And that's it. Plan's made. Now it's just a matter of putting the orders in. So, I don't know, let's use our nifty risk reward tool here. I'm going to enter right around there. Put a stop right about there. I'm going to create an order so that we just do the whole show. I'll just tighten it up a little bit. 1907, 1789, and a target of 26.15. And $500. And that gives us about the right amount of shares here, 424 rounded. All right, just double check everything. Okay, and now this is going to be a buy stop order. Okay, now keep in mind that the trade happens on this line, period, 1907. If you gap above it, you leave your order in as a limit order then. We don't chase it. We don't get in ahead of time. We do as we planned. Okay, and if price hits the low before taking us in, the trade's canceled. So this way, I know every aspect of what I'm doing ahead of time, which relieves a lot of stress and lets me see the market clearly without a whole lot of distortion and move around to the next trades. I'm not worried about the stop. Why? Because it's baked in. I baked it into my position sizing. I know I can take a whole lot of stops at my particular position sizing. I did a post on that. If it makes you a little nuts, then you lower it. The whole idea is just be consistent. All right, I think that's it. Oh, I never did get the trade placed. Where's our trade? So I'm busy talking. And now I got to start over. So it's all part of trading. 1907. That's okay. Repetition's good for me. 1789. And a target of 26.15. And we know we're risking 0.5%, 500. And there's going to be a buy stop. And we double check it all up one more time. 1907. And then we'll check it as you put it into your own broker. I suggest you sim these. The whole practice is, can you make a plan and then live with your plan? So now we'll send the order off. There we go. So I think that's it. All right, so just a broad stroke of talking about markets in terms of contraction and expansion. Contract, expand, contract, expand. And you can see it's a swing, right? The impulse leg is made of it. Even little ones. Even on the reaction leg. All right, so as we move forward, we'll talk about ways to trade these. All right, that's it.